Welcome back to the Opportunistic Trader for October 25. Getting close to month end. Don't think they could bail them out this time. I'm joined by Vince, as always. Good morning,
Good
Vince.
morning.
How are you?
Good, thank you.
Good.
I'm awake.
That's good. It's going to
I'm
be
getting up at 2 a.m. and just going onto the website and just saying, I'm here. Wake up, Larry, tomorrow. I'm doing that. Okay?
I was awake, actually. I was awake.
I'm developing an algo that will do that for me. I will be sleeping.
Excellent. So anyway, yesterday there's a ton to talk about. Market got imploded, which, we've been calling for at least 2 weeks on this site. I'm going to go out and make a call again today. I'm not saying we are going to be on both sides of unchanged. We're only up 20 handles. This is actually a great opening. It's a great opening to short. There's going to be major selling. I mean, the NASDAQ was down over 4% yesterday. That's like a quarter of the crash, So I don't know who's got money to buy and why they need to buy it straight up on the opening, but it should be met by some margin selling around the 10 to 10:30 area. Yesterday's action was pretty awesome.
Wait. You mean 10 to 10:30 time frame, right?
Yes, 10 to 10:30.
Okay. I just want people to understand that you're that's a.
Yeah, I'm saying 10 to 10:30, and then you see a little more at 2:30. But overall, my sentiment poll of people that I talk to in the space that have access to portfolio managers, hedge funds, people are getting annihilated. They don't realize, very many people don't realize how much these stocks are down. You got many stocks down 20 to 30 to 40%. You have indexes down a lot. There's inherent pain out there. Again, I'm not saying we can't stabilize or bounce at some point, but the stability is going to be harder to come by with an opening like this. As a short, or someone thinks the market is going to head lower, these are good openings because you already have $22 in them, and they're actually not even really $22 off of cash. It's almost $30 above fair value. So you're getting an up 150 to 200 Dow point opening if we open here. So that being said, yesterday's action was interesting. And the most interesting part of this action is our key indicator that we've been looking at is the VIX. And the VIX is actually underperformed. We're significantly through the low of 27.13 that we made when volatility hit 29. And volatility this morning at 26.85 is 23. Down 7% this morning, and I'm just trying to figure out what this trade is all about. And I think it might be about that the hedges that people are putting on may not even be hedging them because they're buying so far out of the money options that they're just not helping. So when we have a natural correction, which I want to stress this because this is very, very important, we haven't even hit correction territory. We're not, forget a bear market, we're not even in a correction. So I don't know what the number would be to be in correction and how close we are. I don't know if we're 9% off the high, 7% off the high. I'm not exactly sure. I think it's anywhere, I think we might be 8 or 9. So we're not in correction territory yet. NASDAQ is, there are very many markets that are. What's also interesting for people out there to understand is the way they calculate this correction thing is they calculate this correction thing off the high. We never did that up until, I don't even know, maybe it's 5 years ago, 3 years ago, 6 years ago. They didn't calculate a correction off of the high. They calculated a correction of being down 10%. Not off of the high. If we're up 50% on the year and we go down 10, okay, that's a correction, but it doesn't mean anything. If we're flat on the year and go down 10, that's a correction that means something. So all of this being said, this is the first time in very many years, I think going back to August of 15 for a blip in time, and then back to 11, that there has been anything like this, where we literally are, sitting in a place where we're not up on the year. We're up again slightly on the S&P, 10 handles maybe, but we were down last night. So we're sitting in a place that we haven't been in a long, long time. And the market was up 10% for the year. A lot of these FANG names and other names were up humongously for the year. And the level of where people are long, if you bought it any time after the very beginning of February, you're down money. So it puts the market in a vulnerable position. It puts people in a spot where they may have to sell. I mean, I'm looking at stocks. I mean, Micron traded 34 and change, and I think it traded lower after the close last night. I mean, that stock's year high is 63. I mean, that's in half. Facebook, as we've been discussing, has looked like a lead weight. It's actually bounced $2 today. Still does not look good.
I had a sell signal on that I took off too soon, and then of course it dropped after that, and it seems to be the leader.
Well, did you make money on that trade?
I'm sorry?
Did you make money on a trade?
No, I stopped myself out for a 30-cent loss. I lost patience. I should have just trusted the system. In that moment, I just lost patience because it wasn't moving as fast as it should for me. But I should have just set it and forget it. I just lost patience on it. But that was my
interesting. I mean, to me, this is a very, very interesting opening. I mean, I don't know why we're up 15 or 18. It was funny on the close last night. The market was trading literally on its dead low, looking terrible, and then they rallied the S&P like $14 straight up. So like you're looking at the market up 18.50. It's not really up 18.50, everyone out there. It's really up $25 to $28 off of fair value. So you are buying a market up 200 after a day we were down 500 or 600, and that doesn't really look too good to me. But we'll see. We'll see after the opening if the plunge protection team comes in. But I think the plunge protection team, speaking of the Fed, is angry. They're angry. They're angry with Trump. They're angry with the commentary. This is a setup from Donald Trump to basically have it so that the market, when it does correct, which it is doing now and may go lower for sure, that he's going to come out right before the election and say, hey, this is not my fault. I told Powell to not raise interest rates. Now, you and I both know raising a quarter every 3 months is not really that market impactful, but
right.
But overall, they want they being Trump. There is no they with Trump. It's him. He wants the excuse. He wants the excuse to say, "Oh well, Powell didn't listen to me, and I knew rates were going to cause the crash." And so all of these things being said or equal, the market looks terrible here. There is more to come on the downside. I don't want to toot my own horn, but I've been saying it for 2.5 weeks over the site and on Twitter, especially on the weekends, what our thoughts are here. Our thoughts are still intact. There will be good trading. There will be up days, but overall, the hammer is being laid down here. And, this is a setup to me into the midterm elections that if Trump, loses one or both, he's definitely going to lose one. He probably is going to lose both. That it's game over for the next 2 years, and it's going to be Armageddon, as far as political noise in Washington.
Right. It'll be nothing but a gridlock and noise.
But, yesterday, I'm feeling like if the market, which is the last thing that's holding up, actually doesn't hold up, I think that the country potentially could go into like a mini Armageddon because like even yesterday with these pipe bombs, I mean, whoever's sending those pipe bombs, I mean, it's ridiculous. You can't, President Obama hasn't opened a piece of mail since before he became the president. He'll never open a piece of mail in his life, okay? Neither will any of the other people that he send these packages to, okay? So you're not getting those people off a piece of mail, Okay, nobody is opening their mail. I'm scared to open my own mail. And I'm only kidding. But poor Diana opens all my mail, so it's not, I feel bad for her. But no, it's on a serious note. I don't get it, but I think people.
That was a message to subscribers. After a few bad trade calls, don't send Larry mail.
Right, don't send any mail here. Since we've been doing good, I hope you guys are listening to us, but that I can't help you with. But overall, trading's been good. I think yesterday we were 4-1 on our trades. The last trade actually was the most annoying one because we bought an inch too early, used too tight a stop, and then we would have taken like 15 handles out of it on the pop. But anyway, on to the next. We're flat now. I do think the market is going to fade this opening hard. I just don't know how hard. I don't know levels that I really want to buy, maybe 26.50 or below. But, today could be, listen, you can't recover. I'm just telling everybody, you can't recover from a 4.5% down day in NASDAQ. Open up 70 and think everything, and 70 is really over 100, and think everything's okay. It's not okay. Okay, there's been damage done. Stocks are much, as you would say, stocks are lower, and the bottom line is you've got to look at your statement and see Goldman at 211 on an uptick of $3. It traded 207 yesterday. I mean, that thing is going below 200. What are you going to do? The thing was 250, 260. So at some point, again, I don't want to bring my mother into this, but she wouldn't sell her portfolio no matter where the stocks go, and that's 90% of this country. They're not even looking. We have managers, that are in our building. Nobody's managing internal assets. They just hand them out to somebody to run, and I think that's a lot of the problem here is that the managers are not on top of what's going on. So we have to see in general how that parses out. And again, it's unfortunate the market just came in 6-7 handles. It'll probably come in another 10 before the opening, and we're not there. But this is not a bullish opening. A bullish opening is when you get some kind of washout, okay, and it feels like a little panicky, and you can, as we would used to say, scoop the loop down there and scoop them and be able to trade it a bit from the long side. But up 15 handles after the day we had yesterday is not an opening that I think is, good. And these kind of openings, and I'm not saying it reminds me of the crash or whatever, but, these kind of openings, if they do fail significantly. They don't fail a little. So we'll see on that front. I don't want to sound too bearish. I'm just bearish off this opening. I'm not bearish.
Today could be a chop day, up and down. A couple days of chop day before it picks direction again. But
the direction is intact. I mean, listen. I think we started the year in the S&P around 2660 or 70. In here, I think we're flat on the year. We were actually down last night before they ramped them 20 handles. We haven't seen down. I mean, we're the end of October. We got 2 months left in the game, okay, till it ends for the year. And this, and I've been saying it for a bit. This is a down year. I just don't know how down. I don't know if it's going to be down 2, 1, 7, 12, 15. I don't know, but this is a down year. Things don't look good. The Fed is. Listen, I'm telling you, and unless we totally crater off the planet, the Fed's going to raise again. Okay, and they're coming in December. So how are they going to pull that off in December after he's going to raise rates again? There are divergent trades out there today. Oil is positive. It actually traded down to $66 in the overnight last night, and now it's kind of on yesterday's highs. I think yesterday's highs was 67.40 area. Surprised that it's up, but also you can't look at it that way because it's completely oversold. The market is oversold on a short-term basis, but but you're gonna see some selling here on the margin. Listen, I mean, Mike, I don't know if you want to go back and check it out, but I don't know the last day the Nasdaq was down 4.5% because it's going back a ways. I mean, I don't even know if we were down 4.5% in February on any of those days, but I think we could look at that. You want to pull a chart on something like that? See what we did in February? But anyway, that's a big down day. Now I'm annoyed because the market just came in 10 handles and now it's only up 13. I mean, they'll whoosh this 13 like it never even existed. But we'll see. We'll see. Now it's up 13 and a quarter. Let's look at the straddle. There is 2 days in the straddle. Straddles are moon bid to the moon. Let's look at the 75 straddle. We're talking $47.50, people. That's big time. That's that's a straddle that's meaty. I think you could probably sell that thing and buy some wings around it and walk away for a day or so. And the only thing that I'm leery of on that one is the downside. The upside, I don't mind selling 27 and a quarters. I don't think. But again, we will have a $50 move today in SPOO's 40. It probably will be chopped both ways. Again, I like this opening as a short. This opening, even though we're only up 13, we're really up 23. So everyone has to keep that in mind. Now we're up 12. In a minute, we're going to be up 8. It doesn't feel good. I'm a little annoyed we're not short. Volatility is actually picking back up. It's at 24. When I walked in, it was at 23.15. So it's ticking up a little bit. NASDAQ coming in, it's only up 56. It was up about 90 when I walked in. So half the move is gone there. Almost half the move is gone in S&P. So we're gonna keep an eye on everything that's going on here. Straddles are bid to the moon. There are small bounces in all of these FANG names. The FANG, looking at it, Apple is up 2.5. It was up 3.5 when I walked in. It does not. It should be lower. It should be lower than 213. They don't have earnings, I think, until November 1st. Facebook, I think their earnings may be, next week? I think Facebook may be next week. I think what you said Amazon is tonight, or is Amazon today?
Yeah, today's the biggest day for the S&P 500 of the entire earnings. The big names today, we have a lot of NASDAQ names, is Amazon.
Facebook is next week.
Yeah.
So Facebook's next week. Amazon's today.
Amazon today, Google today. I think Snap might have already came out. Intel, if not Snap.
Snap is definitely not a big earning.
No, I'm just looking at the names, the tech names. But Amazon, Google, Intel.
And we just had Netflix, right?
Well, Netflix was earlier in the week. We had Tesla earlier, and it's funny, we're getting all these upgrades of Tesla now. Turned their first profit, and they are off to the races.
Yeah, trust me, it's not good. It's talking about manipulated earnings. Holy cow!
But yeah, Amazon. We'll be speaking with Tom McEntee later today, and he'll take a look at the what's priced in for Amazon. But I'm interested to see that. It's got to be about probably like 7 or 8%.
Google's earnings are today as well.
Yeah, Amazon.
So it's all there. Yeah.
On Google, Intel.
So it's Tech Week.
Yeah, we'll see. You'll see what it brings to the table. It's interesting out there. There's to be honest with you, there's a ton of opportunity. I'm glad I picked this name, the Opportunity Creator, because it's good that there's a lot of opportunity. Again, this opening is very interesting. I would have liked this opening a lot more negative, a little bit of a panic. That being said, we have to trade every day for every day, and we've been doing good or doing well this month. I don't know the exact trades that we've given out, what the record is, but it's pretty good. and we're going to continue to do that. We're going to be open-minded is the most important thing in trading. We're going to let the clues dictate to us what we're looking at, and overall there'll be a lot of opportunity in this tape going forward. And I think, there's going to be opportunity in other things as well that, work off this market that haven't really worked off this market. Like, it's interesting to me, crude oil today looks like a buy on dip type of trade. It was funny, it didn't give up the ghost yesterday until the end of the day. The end of the day, it gave up, pretty much gave up the entire, move and went negative very late in the day. It tried to hold up, and then, right now it's higher. I wouldn't buy it here, but you could probably buy dips. I don't know, in gold, I don't know, I know you had your show this morning, and I don't know what you discussed. So if you want to fill me in a little bit on gold, I'd love to hear about it.
Well, gold is kind of, you were talking about different correlations and different relationships, and that actually was a subtopic this morning. Dollar's been strong, gold has been strong, and the dollar's flat. And the point is, yesterday gold rallied hard late in the day after having a little chop in the morning. We had a nice little like $3 trade out of that. But there's an increasing, right or wrong, correlation between stock sell-offs and gold rallies. For whatever reason, I'm not sure when that's going to break down or if it will break down, but relationships that weren't there before are becoming a little more robust. So then right now gold's a little softer, and the dollar is flattish. I'm actually more interested in oil, but to your point, correlations that weren't there before are. It's almost like the market had been uncorrelated to anything, and now everything is kind of clicking together a little bit. You're seeing things move for more or less a logical reason.
Yeah, but what's interesting? I just want to point out, and it's actually amazing. And this risk parity trade and all of these guys buying vol against being long indices is blowing up on everybody. So what I'm trying to say is, like, if you look at the bond is in the 138.16 right now, mid 138s. Listen, it's not on the low, which I think was in the 136s, but it's not rallied at all. And as soon as the S&P catches a bid, this bond is going to get tasered. So what's going to happen to everybody is there's going to be nowhere to hide. Literally right. Nowhere. I mean, the only thing left to hide in, really, that's up on the year pretty much is oil. I mean, gold's not up on the year.
Wait, I want to throw one thing at you, okay? Yes. This is not a contradiction, but this is how it works internally from what I see. First of all, to your point, if bonds are perceived as a flight to safety, if this is the best they will perform in a selling stock market, imagine how they're going to do if the market rallies, period. Second thing is, there is one sector of the stock market that is performing well still, and it harkens back to the grandma days. Utilities are up 4%.
Oh, I love that.
So those people who haven't pulled their money out of markets are putting their money into. Just picture the retired baby boomer who wants a dividend.
I haven't picked
utilities.
Up on
that. Whoever is remaining in the stock market is probably being told, start putting your money in utilities. So that might be the last sector to own.
Yeah, I don't know. Listen, I keep getting the calls of buy the dip. You got to put money to work, buy the dip. And I just don't know why.
Buy the dip because none of my other clients are.
No, buy the dip because they think everybody thinks the market's going to rally every single time. I mean, it's actually it really is kind of crazy. I mean, it's like, literally, Mike talked about it, and Mike picked up on this yesterday, and I think it's really interesting. If you look at what all of these markets in the world are off their highs and how much they're down and what's going on with us, it's amazing. It's actually amazing. I mean, you have markets that are in half, many of them in half, and we're just chilling out. I mean, if we
Right.
went down 20% here, it would be literally, it would be rioting in the street. I'm telling you, everybody's living off the return of the stock market. They've been doing it for years. You know, it's like I remember in 2011, there were country clubs in the area that I live in that were basically out of business because no one could pay the dues.
Yep.
No one could pay the dues. They were
One
like,
of them near me was like offering what they used to have $100,000 entrance fee, was offering a free entrance fee,
yeah,
and
well, they
it
just
was
needed people to pay dues. And what's
shocking.
interesting, well, it's shocking. There's 1,400 homes in the community, and like 800 of the 1,400 weren't paying. Okay, that's off of that. I mean,
Right.
so, and now people have an insatiable appetite to buy equities at every level because they think it's free money and the market has never gone down. So again, I'm not saying we're going to go down. I'm not making any of those calls, but overall, it's it's an interesting environment to say the least, and there will be some pain coming. It's funny. I'm watching the S&P trade, and people are coming in to buy it, and like I see like fake bids. They like, it's like a 50 up market flipping back and forth, and then I see like 500 come in, 800 come in, and it trades the level and they're gone. So it's like a cat and mouse this morning. Again, market.
Larry, we have a question from a subscriber asking, you talked about earlier wanting to, sell if we get a pop higher, but what about if our next move is down? His question is, what if our first move is down here? What level would you be throw a bid in there at? Would it be near yesterday's low?
You know what? Yeah, just slightly above yesterday's low to try a trade. I'd have to see the timing on the acceleration. I don't want to sell S&Ps here to get short for trade, only because we've come in a lot from the opening. We've retraced almost, before we got down to 76, we retraced almost half the move of the day. I don't like to sell that, but I would probably be a buyer through unchanged, but I got to look at the acceleration. So to answer the question, you look at the acceleration of how fast the move is. I'd like to see it be faster. I wouldn't want to see this move take 45 minutes to culminate. But overall, maybe the first levels are yesterday's low, a little higher than yesterday's low using a $10 stop. The problem here as well is, especially when you're buying, you may want to buy in smaller size. That's what I would do. Buy in smaller size. Use, rather than an $8 or $10 stop, maybe use a $15 or $17 stop using the same dollar loss, okay, with a smaller position, so half the position. And then what I would do is, again, give yourself a little bit more room on the downside, and on the upside, if you're losing 16, maybe try to take 10 or 8 or 12. But sometimes you get the acceleration quickly to the upside and you can get the 20. But, you have to give yourself more room in this tape. So, first the areas are probably about $15 to $17 away to where I would think about buying. But again, I don't know what's on tap. It's 9 o'clock right now. We're rolling into the 9 o'clock hour. I don't know why we're up so much. After going down 4.5% in NASDAQ, to have an up 100-point opening or 90 here is just not right. It doesn't feel right. So again, I would be leery. I don't know where the market is going to finish. I think if we get a bit of a washout, it's a better trade. But what happens is if we get down into the 50-60 area, you could get a quick acceleration of panic.
Okay, hold on. Maddie just said something. What about if we do make this call? Why not buy the open for an upswing trade higher before a washout? That's not all him saying. All he said was he's considering buying an up open. That's all.
You know what?
I'm painting a picture.
Listen, I think it's not a bad idea. What I'm trying to tell him and what I'm going to tell you is the premium in the futures over the cash went out at 26.56. Am I right on that, Mike? 20. You have the cash up there. So you're looking at it and you're going, oh, the market's only up 12. Well, the market ain't up 12, buddy. It's up 20. It's up 22 over fair value. So yes, you are buying, you're thinking, oh, they're only up 12. They're not up 12. Right now you're buying the Dow. Before you were buying the Dow up 200. Now you're buying, equivalent. Now you're buying the Dow up 130. So
if the S&P was up 12 to fair value, that might be a little bit more reasonable looking for.
Exactly. What I'm trying to stress to people is that they ran the futures $20 on the bell last night, if everyone was watching. So even though we're up 12, we're really not up 12. We're up 20. And again, I think potentially, depending on how we wash in here, this could be a good trading day, even from the long side. I'm not saying, hey, go out and short it. You're going to have areas in here, that are going to be, I'd call it nervy, but you're going to be able to buy. So, the bottom line is you got to keep your powder dry. But to the question, we're up a lot more than it looks like, is all I'm saying to you. Okay.
Right. If you are going to get long, realize the level that you're buying at is not up 12, it's up 20.
I'm looking right at it. The Dow futures are up 118, and there's $50 more. So you're buying up 175 opening. Okay.
Right.
Now, listen, that may hold, but why would you want to buy the market up 175 after it imploded?
At the very least, if that is a trader's strategy, just know that you're not buying it up X, you're buying it up X plus 50.
Right. Well, I want to stress that. So, an S&P right now, they're up 13, but they're 6 over fair. So you're buying up 19. NASDAQ is 35 over fair. So minus 35 plus 60, okay, you're buying up 100 NASDAQ opening. I'm not saying it's right or wrong, okay, but I'm saying I don't want to buy an up 100 NASDAQ opening. Sorry. I'm not doing that, not in this tape. So we want to be nimble. So to answer the question, just be leery of where you're buying it. So again, NASDAQ's up 60 right now, but NASDAQ's not up 60 because you got to add 35. It's up 100. And listen, 100 might be cheap. It might go up 200 today. I can't tell you that. But in my experience, which is a lot of years of experience, this is not a great up opening, especially after you've had real selling. Okay, and you're going to have real margin calls, and you're going to have real pain out there that people don't know the pain that they're in. So, yeah, you could buy an up opening here with the S&P up 14 and sell it up 22. That I'm not saying, okay, but the risk reward on this trade at these levels is skewed the other way. That's all I'm saying. And, I really think that. And again, this might be a strong update today. I'm not saying it won't, but at some point you got to shake some trees. And, we're at unchanged on the year-ish. We're going down. Okay. I'm not saying today, but we're going lower. Okay. This is going to be a down year. I don't know again if it's going to be down 2 or 10, but I think there are too many, I don't know what you'd call it. There are too many headwinds in front of us, okay, to lead me to be very bullish here. And again, I'm not saying today we could be up 30 handles. I'm not saying that, but the action that we're seeing is extremely weak. And this opening is, up a lot more than you think. So right now, the S&P is up 20, and the Dow is up. I'm looking right at it on my screen, 180 from yesterday's settlement. So the question is, after a 500-point down day, do you want to buy up 180? I don't. I think the better trade is to the downside. But again, that could change in a heartbeat. I'd like to see him trade the other side of unchanged. If we trade the other side, this is another point. If we trade the other side of unchanged here, the market will still be up on the day. So, overall, I don't see anything that compelling that gets me bullish. There are some things out there.
Hey, Larry, another question. Yeah. They're wondering, what signals are you looking at today? Is it DAX? Is it something out of Europe? Is it something out of Asia?
I'm looking
at individual ETFs, like certain sectors. What are you looking at?
I'm looking at volatility. is
Okay.
my key indicator. I've been using it every day. I'm hoping that you guys out there are looking at it. It really gives it away. So, it's day over day. We don't look at it for a period of, we're not saying, oh, it was 25, now it's 24. But like today, if this move is sustainable, you would like to see the VIX below 22. You don't want to see the VIX at 24, okay? We're a smidgen or an inch away, okay, from going to 30. If we do not hold up today, the prediction that I will make is that volatility will trade through the high of the move. If we get down into the 26, 20, 30 area, all bets are off, and vol will go up. So I would look at volatility. DAX has been a false starter. I don't know the read you can get. That index is down 14-ish for the year. We're basically flat. There's not really a read there. Overall, I like crude a little bit as a tell. I don't understand it today. It was very, very weak overnight. Thinking about buying it overnight, didn't. Now it rallied about $1.30. Look at that. I like to look at the dollar, but that's not really giving anything. That's back and forth, one day up, one day down. Gold obviously isn't an indicator. So right now I'm looking at what I would look at, like if I was sitting in my screen like I am, but for you, I would look at sectors. So obviously you want to see how the banks do. So the XLF, you could look at the XLE, you could look at individual names around that. But overall, the tell is the volatility index. That's the purest tell. And I know, I talked to some shorter term traders out there and everybody's looking at it. I think it's important. Sometimes it's a false starter though. So you gotta, keep it in the back of your head. But that's the key indicator that's been working. It's really pure. And a day over day works well with that. So what I'd like to, stress is, so let's say the market's up 13 or 12 here. And let's say we go through unchanged and it gets a little panicky. To have a real sustained down move at that point in time, I'd like to see volatility above 26. Okay, if volatility doesn't pop above 26, I would want to be a buyer potentially on dips. It runs into a little bit of danger because sometimes that doesn't work and the volatility will trail. So you want to keep an eye on that. But the key thing to do when you're looking at this is, one is volatility, and then two is sectors. You want to see how the tech sector is holding up. You want to see how the banks are holding up. You want to see how the energy is holding up. So I would look at my key sectors, and that would be my second tell. So the first tell we're using is volatility, and then we're looking at sectors and then individual stocks inside of sectors. Around that, I would use potentially oil. And then again, we always are looking at the DAX and the Nikkei, but really the Nikkei, it rallied 200 points, 1.5%, but that thing was down like 4% last night. That index, I don't know, what was the recent high there? 24,000? It's trading at 21,000. I mean, it's gotten its face ripped off. So, it's hard to use these external indicators to get, what we're going to do here in essence. So, vol is the most important one, and then individual sectors, and around it foreign markets, but they're not really a good tell. And overall from that, just looking at option pricing, we'll always look at option pricing, option volume on the tape, numbers of different things that we look at. But, again, I'd like to see a wash here today. I'd like to see volatility a little bit contained. I do not want to buy an up 13 opening. Now, it may work out to buy here. I'm not, for those people that are asking the question, it may work out here. This may be a good level to buy. But to me, I want to see a shakeout. I want to see a little bit of panic. I want Mike sitting next to me go, holy shit, excuse my language, holy cow, and then I'll, then maybe, we'll have a good opportunity to buy. But right now, that's what we're looking at. And again, we're up 14. which is really 20. This may be okay to buy, but what's my question to anyone out there is, what's the rush? Like, what are you missing? You're missing the bottom? I mean, I don't know if that's a good bottom. So anyway.
Additional question, just following up on what you're saying about TEL. Somebody's asking, are you looking at the Russell at all?
I don't. I have it on my screen. Obviously, I'm not trading off it. The divergences inter-index have been very large, and the Russell, Russell probably was the good tell when we were heading down, because we were looking at it every day and it was making lower lows. But nah, I'm not really looking at it. I mean, I look at it, but I'm not really trading off it.
The Russell would at least be a tell for the NASDAQ, which is a tell for everything else. Smaller stocks tend to get hit first in the first wave of a down move, and that is what happened. From here, though, who knows?
Yeah, listen, I don't know. I don't know what the tape has in store for us. Again, I just don't like to buy an up opening like this after. I don't know if Mike looked it up, but the last time the NASDAQ, dipped like this, you can't pull that up. Really? Okay.
I don't have the exact stat.
Oh no, I just wanted to look at like a chart from February, to see. I don't remember how much that down move was on that day, but I don't think it was 4.5%. I think the SPOO had a bigger down move than the NASDAQ. I think the NASDAQ held in during that time. But again, we'll look that up and give that to you later. And other than that, the NASDAQ's popping down. It's almost off my screen on the downside. This is going to be an interesting day. It's a little skittish, so we're hanging in. But there's going to be 20 handle bops each way. Volatility's back above 24. It should be 30.
NASDAQ already has a 150-point range right now overnight.
Yeah. Then it's funny. I was actually out last night, and I was looking at NASDAQ, and it was down like 30, and then 2 minutes later it was up 40. So, there's movement. The S&P is failing as we speak. It will not make the opening. There's going to be better. Oh, there's another triple down tick. It's off my screen again. So,
by the way, you just said you were doing something last night. A subscriber by the name of Matty Ice says he spotted you on TV on the floor of the Heat next game. Is that accurate, or is that a lookalike?
That was not me. that was my brother. I was not there. No, actually, went to the game last night. It was a lot of fun. But overall, great trading today. I hope I can help everyone. I'm glad that all these people that were antsy to buy this opening have waited, because you saved yourself about $13 since I walked in. More to come on the downside. The market potentially could finish up today, but I'd like to see a little bit of panic or a little bit of holy cow type action. So anyway, that's what I see here. We're getting close to the opening. We're about 15 minutes away. I don't know if you want to end on anything. I'll leave it to you, Vince, because I've done too much talking. So it's up to you. It's up to you. Actually, I want to hear.
It's you know what? That's such a loaded. It's actually been informative for a change, Larry.
Thank you.
No,
I appreciate that.
All right. I'm gonna throw an intuitive outlier based on 2 or 3 scenarios that I've heard. The only thing I haven't heard mentioned today from anyone, other people that I speak with, yourself, is what if the market comes in really weak and makes lows early and has another end of the day rally? I'm just saying.
I like it. I don't have. Listen, I want to buy.
I mean, it feels like a really painful potential day for a lot of people who aren't nimble.
I want to buy.
We could open 10 higher, go 20 higher, go 50 lower, and then scream in the last hour again. I'm just saying
we're going to have that.
It could be one of those days. It could be a day where a lot of people get hurt.
Yeah. I mean, listen, I just think there's going to be margin selling. You got to be literally careful for that.
Right. And see how the market absorbs it is what I would say.
Exactly.
Right.
So that's our that's our literal game plan here. We missed selling the up 25. I was a little nervous for that. I do think the market trades the other side of unchanged here for sure. And what you got to be leery of is to get the Dow down today, the S&P futures have to, not the Dow, but to get the S&P cash down today, we have to trade down to 56. So we're nowhere near that. We're 20 handles up. So we could fall a ways, and we'll see what happens. But I want to get ready for the opening. I will be in the chat all day. I'm going to be on the air. It's going to be a very active trading day. We're looking forward to it. We hope we are helping people out there, because that's the true goal of the site, is to really help people understand the market, have the ability to trade, have the ability to not trade alone, and learn. And I'm always open to talk, and I'm always open to answer questions. I'm here for everybody, and I hope it's helping.